What's up, everybody? It's your boy Orlando, aka King Smitty, and welcome back to my trading journey. And today, I have a couple of good things to talk about that's gonna help us out going into 2024. Because as you know, it is the end of 2023. We have roughly like 2 weeks later left in the year. But before we get started, I do have the link below for Webull. So if you don't have Webull, go ahead and sign up. Deposit $1 in there, get you some free stocks. Don't forget to go ahead and like and subscribe to my YouTube channel. I really appreciate it. We have hit 100 subscribers. Now we're working on getting to 200. That is our next goal. So for this video, what I want to talk about is two things for the end of the year. First thing is tax harvesting. So tax harvesting is like three parts. It's like a three-part thing. First is selling any security or like a stock that has lost value. You have lost money in. Because as we know, not every stock that we do or every trade that we enter is going to be a winning setup, or it might not go as we planned it initially when we jumped into the stock. So the first step would be to sell the stock or the security. And then the second step would be, since you sold that for a loss now, that capital loss is used to offset the capital gains that you have made throughout the year from selling stocks that you have taken profit on, right? And then step three would be to use the money that you sold from that losing stock and put it into one of your plays or your strategies or your stocks that are making more money. Because we're supposed to let our runners run. So the stock that's making money, let's add more money into that so we can make even more money, right? So it's three steps right there. Sell it for a loss. Have that loss offset some of your gains. And three, put that money that we have now into our better stocks, right? And if you look right here, this is an example, just so I know some people are visual learners. Investment A, we sold for $20,000. So now, because we didn't hold it, for a year maybe, we're gonna get taxed on there 35%, which is $7,000, right? But then you have investment B, where you might have lost $25,000 on there. And so since you lost $25,000, you're still gonna times that by 35%, capital gains or capital loss. You did not hold it for a year, we're assuming. So now that $20,000 gets offset. So that $7,000 tax bill that you have is now gone. And then you can apply $3,000 of it to reduce your income that you actually have from your job, to kind of reduce that a little bit, which will now save you $1,050 worth of taxes from your actual income. And then you can apply the other $2,000 to the future gains or incomes that you may have. So this will lower your tax bracket at that point, because especially if you're close to that tax bracket line, because it's showing that you're not making as much money because of that loss. And in total, you would have saved potentially $8,050 in taxes. So that's what tax harvesting is. You use your gains you use your losses to offset your gains, so that way your tax bill isn't as high. And we know with stocks and in the stock market, you're not trading for today, you're doing it for the future. So that's the same thing with the tax harvesting. It's December now, and that's why a lot of stocks go up and down. They fluctuate a lot towards the end of the year. A lot of companies are tax harvesting. They made a lot of money, so let me sell some of my losers, so that way we can offset some of our gains, as well as we can recalibrate our portfolios now. So that's where the tax harvesting goes. It is the end of the year, and of course we have the Santa rally. coming. For those who don't know, the Santa rally is was called the Santa Claus rally. Describes the tendency for the stock market to rise in the last trading week of December and the first 2 trading days of the new year. Right? And speaking of the Santa Claus rally, I want to take a look at this chart right here just to show you what I think about the Santa Claus rally, right? So we're gonna do this. We should be recording now. And if you can see right here, this is the S&P 500, the SPY, stock uh, stock ticker symbol SPY. And as you can see previously, I did mark up this chart a little bit. You got this shoulder right here, June 23rd. You got the head, get another shoulder. That's a reversal pattern. And as you can see, it did drop below support. It tried to come back and test at the neckline, and then it dropped. Excuse me. And then it rose up. You see, it got back into the channel. It broke out, and as you can see right now, we're over here. We're up here, shall I say? And these blue lines right here is the Bollinger Bands. Down here is the RSI. I got rid of the MACD for the moment because TradingView only allows me to have 2 indicators on there. But the thing about the Bollinger Bands is, if it's above this Bollinger Band, you can expect it to come back down. And if it's below the Bollinger Band, you can expect it to go back up. And I just want to show you some examples. Boom, at this shoulder over here on June 15th, 2023, it hit the Bollinger Band. You can see it came down. It went back up. You can see right here, it's hitting it. It kind of consolidated. It tried to go back up again, and then it dropped. You can see right here, August 23rd, it was below the Bollinger Band. And what did it do? It came back up. You know, it got close to it again. It dropped. You can see it's hitting it. It's hitting it. It went back up a little bit. It didn't do a run this time over here in September 23rd, but it hit it. It came all the way down to 422.27, and then in the next 2 trading days, it got all the way up to 431. And if you're doing like a option, that could be a large chunk of money, a large percentage gain right there. Even though it came down at the end of the day, it still went up. And you can see it came back a little bit from there. And then it came back down here on October 23rd, outside the Bollinger Band, and then that's when that run started. You have a gap up right here. Let me get this brush together. You have a gap right here, which will probably get filled eventually. And then now you can see that we're outside of the Bollinger Band once again. And on the RSI down here, you can see it is above 70, which shows that it is overbought. So if it's overbought, then you can see that a sell-off might happen. People taking profits at that point, which will drive the stock down. So and this is the midpoint of the Bollinger Band, this orange line. And you can see it's kind of close to, let me see if I can get a line on here. Horizontal line. I want you to look right here. That line I just placed on there. You can see at one point that was a resistance line. It came up here. It couldn't break on December 1st. Came back down. It got close to it. December 6th couldn't break. Couldn't break fully on December 8th. And then it finally broke it. And then you can see again back here on July 27th, it gapped up in the daytime close to that 459.91, so we could say 460 roughly, but to be exact 459.91. It gapped up to that price and then it dropped down, which shows that this is kind of like a good spot of resistance, which is now support, because resistance comes support once you break it. So I could definitely see this stock in this upcoming week. If anything, if it's not consolidating in this area right here, I could definitely see it. Let me get rid of that too. Boom. I could definitely see it coming back down, hitting this, and then running up for the Santa rally. So in this upcoming week, I could definitely see it having us a little pullback if it does not consolidate right here. And this is the by the S&P 500, which is kind of like an indicator of how the overall market is going to perform in a sense. So I can definitely see it drop down for the moment this week and then rise them back up. But if it does do that, I'm definitely going to be playing some options, maybe some put options on the way down. And then once it hits 459 or 460 roughly, at that point, I may have to do some call options and ride that back up for this Santa rally that I do believe will come. And then once it drops down, this RSI, it should go from under. It should go from being overbought, roughly, hopefully around the 60s, maybe the 50 area to be neutral. But if it's in the 60s, it's showing that it is still bullish. So that's what I'm looking for. I'm looking for a little pullback on the market, if not just consolidating, and then going up. Eventually, once this market does turn around, which is a possibility that it could next year, then you'll see 460 will be a support. If it breaks through the support, you can look for it to come into 441 to fill that gap. And the next level of support would be the 432. And if it breaks that, then the next level of support would be 417. So that's how I'm play it on the short term. Doing options for these Santa rally that's supposed to be coming up. I have been doing a lot more day trading and swing trading as of recent, and it has been causing my trading portfolio to grow rapidly, and it is actually gaining momentum of catching my main portfolio. So I am trying to see how that goes. I'm trying to see if my trading portfolio is going to grow my long-term investment, outgrow my long-term investment grow. And I am looking for a way to show my gains when it comes to 2024, so I can track my progress compared to the S&P 500, like I did in previous videos when my long-term investment portfolio was attached to TD Ameritrade. But it is in Charles Schwab now. I do not like that platform as much, but it is a good platform. But yeah, so I am going to working on to find a way to compare my portfolio overall to the S&P 500 for the next year. So be on the lookout for that. And I appreciate y'all for rocking with me so far. Go, make sure you hit that like and subscribe, and leave me a comment on what are you going to do for this Santa rally if it do come. Are you playing options, or are you just going to ride that wave up? Let me know. Yurt.